Hi, this is Timothy Schutte with Exit Realty and Associates. Welcome back to my video blog. The last few weeks we've seen some home mortgage rates change and move and mostly for the better. What's been interesting to watch for the last 6 months to a year is the volatility in it and the fact that the Federal Reserve was really looking at inflation numbers, and then they said, well, we need to look at inflation and tariffs. And they're like, well, the job market's really pretty strong, so we need to keep looking at that too, because we can't have inflationary pressure from too strong of a job market. The last 2 to 3 weeks has been pretty interesting. Saw an article where Bureau of Labor Statistics, which is where one of the Fed governors was watching and paying the most attention to, they had been forecasting and saying we've created 250,000 new jobs, but then revising back the next month or the following month quite a ways. Like the numbers were 250,000 new jobs, and then they'd get revised back to 50,000. Well, that's a big difference. So statistically a big difference. The change should be that we should see lower interest rates coming. Because what ended up happening is that Fed governor resigned after he realized that was happening. President Trump has been putting pressure on the Fed, and one of the ways that he did do that is the BLS director got let go to get replaced with somebody that would look at the numbers slightly different, so there's a little pressure there. And from that pressure, the Fed governor resigned and got a new appointee that's more favorable to the president's desire to lower interest rates. The Federal Reserve is supposed to be independent. We would say it is, they say it is, but there is always some outside influence. And what I suspect we'll see coming into the next few months is a little bit lower interest rates yet. Some of the lowest rates I've seen, are 6 to 6.5. Different lenders, different origination fees can change that. But for the most part, it's been a positive direction for the housing market. If we do get some better rates by the end of the year, I could certainly see some strong activity. And right now our marketplace is pretty stable from buyers market to sellers market. But there's strong pressures in a lot of directions on that. And the higher our inventory, the stronger it will become a buyer's market. There's a whole bunch of different nuances to this. We'd happy to talk through it, but it's kind of it gives some hope, I think, for seeing lower interest rates coming up this next quarter. If you have any questions, please feel free to reach out. This is Timothy Schutte with Exit Realty and Associates.